Welcome back to our podcast At Home on the Lakeshore, where we talk about home loans with our local home loan experts at UnitedOne Credit Union. My name is Mike, and this is episode number 12. We've made it a full year, the full cycle, 12 episodes, one each month. So we've made it 1 year into At Home on the Lakeshore podcast. So congratulations to all of you listeners that have joined us on this journey, and congratulations to our home loan experts. And we're going to welcome back onto the show. We've got Linda, Carrie, and Julie joining us today. Hello to all of you.
Hello.
Hi.
Yes, happy fall to everybody. You know, fall is in the air. Those leaves are really starting to change. It's October, which some people say is Halloween season. Other people call it pumpkin spice season. What do all of you think about fall? What are your feelings on this time of year?
Love the leaves changing colors. That's always so pretty.
Mm-hmm.
I like the warm days and the cool nights, leaving the windows open.
Yes.
Oh, yeah. Finally turn off that air conditioning. That's nice.
Pulling out all the sweaters and different clothes and not having to wear shorts. When he gets my age, shorts aren't always a good thing.
Yes, and then the bonfires, football, things like that. It's just kind of nice. You get that,
Football.
just a bit of crispiness in the air. You know, for some people that means hay rides and pumpkin patches, you know, going through mazes and haunted houses and things like that, which are always fun and exciting as well. But me, I just kind of like that smell that's in the air, that kind of feel, that fall kind of atmosphere, that crispness, you know, football on the TV, and then having those kind of bonfires, hoodie weather, you know.
Mm-hmm.
So it's,
Yes.
yeah.
It's that smoke smell, you know, you go outside,
Mhm.
oh, someone's having a fire out there.
Like
they're
leaves
having
burning.
a bonfire.
Leaves
Yeah.
burning, yes.
It's like
Yeah.
I'm crazy, but like when it's about to rain, you know you have that dirt smell. It's a very different. I love that smell.
Mhm.
So
You
having
do?
I do. I know I'm weird, I guess.
Funny.
But I love
It
that
makes me
smell.
think of
And then,
spring. I know the smell you're talking
Yep.
about.
yeah.
Mhm.
But now going into fall or being in fall is, you know, having those bonfires, that smoke, you go outside. Ooh, who's having a bonfire right now?
What you cooking, neighbor? Right?
Yeah.
Yeah.
Yeah,
Some
it's a
s'mores.
nice
I'll come
time of
over
year.
with my s'mores.
Yes, indeed. Yeah, fall's always just there's just something about it. I think maybe it's that feeling that you get that you know what's coming, so you try to soak it in more. You know, with spring you
Yeah.
want to get out because it feels fresh and new and everything's growing and budding and blossoming. But in the fall, there's just something like I've got to get outside this weekend. I have to be outside because we only have so many more weeks, so many more days of this before you know that
Yes.
other stuff starts coming in, which we won't talk about today.
We won't talk
No,
about
no.
that.
No.
It doesn't exist.
Not ready for it.
Nope.
No.
All righty. Well, let's go ahead and move to talking a little bit about our topic. But before we get into that, our topic for discussion today will be talking about HELOCs, and that is home equity lines of credit. But before we do get into that topic, let's go to Julie's joke of the show.
Ooh, all right. So, do you know why your nose grows in the middle of your face?
No.
Mm.
Because it's the center. SCENTER.
Oh, my Lord.
Oh
Wow.
my goodness.
Okay.
Shut up.
Hey, it only took us a year to run out of jokes there, Julie, but you know what?
Nope. I got a lineup.
She's got more, folks. She's got more. Oh, okay.
Yep, I'll be back next month.
But wait, there's more, right?
Right.
Okay.
I was thinking like pumpkins, ghosts. There's got to be something.
Yeah.
I was thinking fall themed about it, and I was overthinking it.
Yeah.
Yeah, and I
were
went
even
down the
talking
path
about
of
all
Pinocchio.
the smells and all everything.
True.
And I'm like,
That's
oh,
a
they're
good
gonna
point.
get it. They're gonna get it.
Wow. Okay.
Yep.
Well, with that, let's please get started with today's topic.
Yes, it's time.
Yes, it is. It is. So today's topic is HELOCs, and no, that's not some kind of strange made-up language from the Lord of the Rings films. It actually stands for home equity line of credit. So we have our experts here to join us. They're going to tell us a little bit more about how this works. Who wants to start us off talking a little bit more about a home equity line of credit, or a HELOC, as we like to call it?
I can start it off. So home equity line of credits are used for many, many, many purposes. But generally when we establish a line of credit, you're establishing it for a period of time. So for example, they're good for 10 years. So during that first 10-year period, or actually 20 years, I'm sorry, but 10 years is the initial draw periods where you can make payments, pay towards the principal, reopen it, and use it for many purposes. Some people like to have these because if they have a project in the future, they don't necessarily have to use the funds right away when we close. They can use it when they need it. Maybe they use it up and they have to buy a car. They don't have to reapply for it during that 10-year draw period, and they can utilize it over and over.
When we determine on a home equity line of credit, is like a max amount. So you're given, when Linda talks about a draw, you're given a dollar amount, or you've requested a dollar amount. It's very similar to like a credit card where that's your limit. So you can use that line until it gets to the limit, or until it gets to the 10 years. So that draw period is based on maybe how much you are looking for, or maybe you've said to us, max me out. We can go up to 95% of the value of your house. So maybe it's a larger line of credit. But it's revolving. It's, as you pay it down, more is available to you. But again, there is that limit.
Mm-hmm.
And it's nice because with standard mortgages, your payments are principal and interest. With the home equity line of credit, your payments are interest only. So sometimes that can be a little easier to swallow when you have a larger amount that you want to set up the line for, and you need to take a bunch of it out initially. You're going to have a little bit of a larger payment, but then later on, when you have a lower balance, you're going to have a smaller payment.
And there is no prepayment penalties to pay these down. So yes, like Carrie mentioned, it is interest only, but when you want to open that line again, you just apply principal reduction payment. So then that will open up that line of credit for you again.
Okay.
And when it
Go ahead.
Yeah, go ahead. Nope, go ahead.
Well, I just had a question because I know sometimes I've heard folks ask me this question before, and me and my background being in marketing and you being the experts with home loans, is sometimes I think people get confused with home equity loan versus home equity line of credit. Can you try to explain the main or major differences between those two? Because they are two separate products, a home equity loan versus a home equity line of credit.
Correct. The line of credit is the draw period. It's revolving. It's if it's X number of dollars, it's out there for a draw period of 10 years. You have access to it. Maybe it sits at a zero balance. You don't have to take funds right away. So it could sit at a zero balance until you're ready for those funds. But in a home equity loan, it could be the same dollar amount. Maybe we're talking about $30,000 line of credit and a home equity loan. So the home equity loan is, we're doing the loan for $30,000 all up front. You're given the full $30,000. Your payments are structured on the principal and interest payback of the $30,000. Or that line of credit payment is interest, but it's based on the outstanding balance, and you don't have to use it all at once.
Okay. Thank you for that.
Think,
So
think of
essentially
it
the
kind of like
HELOC.
a
Oh,
like a
go
quick
ahead.
cash or a credit card. You've got a
Mhm.
limit that you can borrow up to, and you just use it as you need it. And as you pay it back, it's available for you to use again.
So your home, you're
Yep.
basically using your home like kind of like a giant credit card then.
Yeah.
To an extent, the equity that
Mm-hmm.
you've built in your home. So then how
Correct.
do people use those funds? So let's say they get it. Obviously, when you have a credit card, you literally have a piece of plastic you could take to a store or use at point of sale or online. So, okay, I've got a line of credit for my house. Let's say it's at Julie's example of $30,000 or up to 30,000 that I could use for expenses or purchases. How would I go about accessing those dollars?
So you will see your home equity line of credit either on our through your online banking or our mobile app. You can just automatically do a transfer right to your checking account, and then you have the debit cards or you have the personal check, or you're more than welcome to come into a branch, use our PTMs, and pull out cash. So
Mm-hmm.
you have control over all of those funds. And when you're ready for those advances, you control those. You make the transfer from the line of credit to your checking account and then use your debit card or personal check. So on the weekends, say your water heater goes out on a Saturday and you need to get to the store and get a new water heater, you
Mm-hmm.
have instant cash. You can make that transfer. You can write out a check and get that whatever, if it's the water heater or if it's a window or whatever the case, or something is on sale all of a sudden, you have that instant cash.
Mm-hmm.
And it's
One thing that I
so,
wanted, sorry.
sorry, I was just going to say it's so nice because once you set it up, you can use it from year to year for different things as you need it over that 10-year draw period. Like one year you might need a new driveway, or, the next year you want to put a deck on the back of your house. It doesn't have to be home improvements, it could be a new boat, whatever.
Mm-hmm.
A vacation.
Yeah.
Yeah.
Something I wanted to mention, I know we're talking about that 10-year draw period. Um, you're probably thinking, well, what happens after 10 years,
Mhm.
Then we go into a repayment itself. So you could either one, refinance, reopen that 10-year line of credit again so you can open it up for another 10 years, or say, I'm not going to utilize it anymore. I just want to pay it off. You could just either pay it off if you have the funds, or then we amortize it over a period of time to make that payment set for you. And then that is going to be your required payment through the life of the remainder until you pay off that loan. And it is based on the balance, not the limit. So whatever balance you have, that's what we're going to amortize to give you that new payment.
Correct. Correct.
So you never have to pay what you don't owe, right?
Correct. Yep.
Correct.
Yep. If
Okay.
you owe zero, there's no payment. There's no annual fees. We don't have any of that. So you owe nothing. It's zero.
So it's kind of nice feature to have if you've got enough equity built up in your home and it's something that you want to work with the home loan experts that you could have it available in case you need it. So there could be some nice emergency funds available for folks depending on what might pop up, like you were saying, Julie, with a
Yeah.
water heater or those unexpected expenses that may come along. And so you're really not
Mhm.
out anything if it's something that you want to try, and you might be something that could be very beneficial for you and your family. That's kind of great. I'm learning some things here myself, folks.
Yeah. Maybe
All
you want
right.
to surprise your spouse and take them on vacation. Yeah, I want to take money from there.
What are some other things about a HELOC that our listeners should know or would want to know about this interesting product and a way for people to utilize and take advantage of the hard-earned equity they've built up in their home?
Mhm.
One thing
Um,
that we haven't really touched on is the rate. So the
Mm.
rate is not locked in. It is it's adjusted according to the prime rate. So we watch prime out of the Wall Street Journal on a monthly basis. And then if prime changes, so can this line of credit. So that is something always to watch too. If, say you've got this line of credit and all of a sudden you've maxed it out, but now Prime started increasing it, maybe it's time to look into refinancing that line to a home equity loan, because those home equity loans maybe are fixed up to the 15 years. So maybe you're going to get a better rate that's fixed longer. That home equity line of credit is an adjustable rate or a variable rate because it's connected to the Prime.
Or vice versa. If rates start coming down, hey, your home equity line of credit rate will automatically decrease monthly based on Prime going down.
Correct.
Nice.
Also keep in mind this is a mortgage. So most of the paperwork that we request for a first mortgage, home equity, anything like that, we will be looking for in this, so it is some paperwork to be done, but once we do it, then you don't have to do it again for 10 years. Once you provide all the documentation, you're approved or not, nothing's going to happen to that line of credit. Of course, you're going to sign the note, the promise to do certain things on it and that, but as long as you make payments, it'll be good.
And what's really
Good to
nice
go.
with our home equity line of credit is there's not an annual fee. I know some competition out there does have annual fees, so that is something you're always going to want to ask. Is we don't have that annual fee. If it sits at a zero for year, 2 years before you need it, you're not paying anything extra for it. There is not that annual fee that we charge.
And then just recently, I worked with a member that I just paid off their line of credit at a different financial, and they had a penalty for paying it off where we don't.
Wow.
So if we want to refinance that into, like Julie mentioned, a fixed 15 years second, home equity loan, there is no penalty for us to do that for you.
Okay. Yeah, those are always things that just a general word of the wise to consumers is always be mindful of fees that may be out there or any payment penalties or early payment penalties. So if you're working with other lenders or other institutions or things out there, make sure that you're asking those questions to find out what those are. Our experts are here to help you as well, to let you know any or if we have fees on anything as well. So we're all open about that. If you want to learn more about a lot of those things, you can visit our website, UnitedOne.org, www.UnitedOne, one spelled out, .org, and you can learn all about our rates. We post them right online. We don't play games. We don't mess around. We're not afraid of our rates. It is that time of year. Halloween, things get spooky, but we're not scared. We're not scared to show our rates and have them posted right out there on the internet and the interwebs for everyone to see, and our fees as well. But if you ever have any questions, we have the experts here and more than happy to help you. As we get ready to wind down this episode of the podcast, exciting stuff. I think I like this topic a lot, talking about credit and utilizing the equity that you've built into your home. Is there anything you'd like to leave our listeners with, or any other pieces of the HELOC that we want to make sure we impart to our listeners today?
No, I think
Property values are great, so you probably have hidden equity that you may not even be aware of. Call us, we'll check it out for you.
Yeah, our home got reassessed, so there's a whole bunch of stuff. I didn't have much of a choice on that one, but for those of you that may be going through something similar, you might be surprised with the equity that you now have in your property that maybe you didn't even have as recently as a year or two ago. So it's kind of incredible how that's moved. And give us a call. Let us know, and we can certainly set you up or help you out, or explain to you more how would this process work for you. What would make sense for you, and then build that out that makes sense for you and your family, and so that you can understand all the parts of it. So we know when it comes to home equities, when it comes to home equity lines of credit, or really anything having to do with a lien or a mortgage or anything with your your home, that you want to make sure that any questions you have, get those answered. And we're here to help you with all of that. So thank you all very much for joining us today and for listening. Excellent topics. We'll have more as we enter into year 2 of the At Home on the Lakeshore podcast. So thank you very much, listeners, for joining us today. We're excited to have you join us each and every month. So be on the lookout for our next podcast next month and the exciting topics that we'll have for that. So thank you for joining us today and listening to our podcast. We do encourage, if you have any questions about home loans or anything that you want to ask our home loan experts, please shoot us an email at homeloans@unitedone.org. That's homeloans@unitedone.org. We would love to get some of your listener questions and answer some of those in a future podcast. And if you like what we're doing, we encourage you to give us a like and rate us wherever you download and get your podcast from. And of course, feel free to share it with family and friends, or even your frenemies if you have a few of those. Why not? Go ahead. So thank you all very much for joining us. You're welcome to follow us on social media. We're on Facebook, where it can be found at Facebook/UnitedOneCU. We're also on Instagram with @UnitedOneCU. We look forward to having you join us next month. And until then, have a great fall.
Yeah. Goodbye.
Bye.